All right, what about now? Can you guys hear me okay? You guys should be able to hear me now. Just let me know. This should work. Still no voice? Still no voice? No sound, says we can hear you. Yes, okay, yeah, perfect. All right, there we go. Thank you, Ian. Thank you for joining in. Sorry about that. So again, we're gonna listen to Bloomberg. If there's anything that comes up, we know that Jerome Powell is gonna be speaking today, so very interesting day ahead. But I just wanted to give you guys an update. So the markets are literally, I woke up and it was pretty bad. I mean, it was just the S&P is down a little bit over 44 basis points, and NASDAQ about 1.5%. Bitcoin is down a little bit over 15%. So let me just bring up Bitcoin on this chart. So you'll notice Bitcoin, again, we're down, literally just straight up down. It's pretty bad. And, a lot of it has to do with the 10-year yield, because that's what a lot of people are looking at. This is going to be top left. That's going to be the 10-year yield, now up a little bit over 13 basis points on the day, trading as high as 1.369. And this right here is going to be the VIX, so the volatility on the S&P 500, something that we have discussed very frequently. So again, this right here is going to be the chart, and we had talked about it during the market updates and how that spikes. We've been hovering over 20, so the fear is there. The markets are cranky, and we were hovering right inside that green rectangle, right? So very important, and we are seeing a potential spike once again, similar to what we have already seen in the past. This is not something that's new. It's happened over and over again. So Apple down a little bit over 2%. So we've got Apple down left. We've got the 10-year yield top left. This right here is going to be Bitcoin top right, and we've got the VIX top bottom right. So again, absolutely incredible market volatility right now, and basically I feel like a lot of it got kicked off. With when Elon Musk said over the weekend, that prices of Bitcoin and Ethereum do seem high. So that was and he said a very similar thing. You guys remember it when he said Tesla stock price is a little bit high in my opinion, and look what happened with Tesla stock price. It absolutely rocketed. So it's a little bit counterintuitive. So again, we are going to try to understand what's going on. So let's see if this is something that we want to listen to.
How, the when of it, the way of it, that we get back to normal?
I think the first thing is really making sure that we never get in a position.
All right, we'll come back to it when something else is going on. I don't want to listen to that right now. But for the markets, I mean, for the most part, this is a very brutal gap down. So we have a little bit over 191, 200 people. Make sure that you guys, smash that like button. I really do appreciate you guys' support. So definitely helps out with the channel. So let me see. All right, that should be fine. As long as you guys can hear me okay, and as long as you guys can see the screen, that should be fine. Sergio, what's up, man? Thank you so much for joining in from Spain. I really do appreciate it. And yeah, I mean, it's a pretty big drop. It's definitely a pretty significant pullback that we're seeing for the broader markets, and a correction, a healthy pullback was likely, and something that we've been expecting for some time, right? Right. So we went over the S&P 500, the NASDAQ. We've talked about the VIX. We've talked about the 10-year yields, the inflation that's creeping up. So Jerome Powell is going to be talking about that today, about the labor market, about inflation, about the interest rates. So that's going to be very important for us to listen to in the future. So greetings from Philippines. Jeff, what's up, man? How you doing? Thank you so much for joining in. Really happy to have you on board. Again, so for new people who are joining in, top left, we've got the 10-year yield. Top right, we've got Bitcoin. Bottom right, we've got the VIX. And bottom left, we've got Apple. Mohit, reasons for the markets being down. Well, there's a cyclical rotation out of tech, and we've covered that in my previous videos, because if tech is down, if tech and healthcare is down, it's going to really pull back on the broader markets, and it's just going to weigh down on the broader market indices, right? So some of those other sectors like financials are doing well because the yields are rising. That's actually beneficial for the banks. Diversification is of course key here, but if you are looking for growth, it's also a little bit on the concentration for what you're looking at. So NEO, Tim, let's look at NEO really quickly. This right here is going to be the SPY and the Qs. We've got the Bitcoin over here, so NEO is gapping down as well. I believe it was down a little bit over 7%, 8%, trading as low as $47. So definitely, very scary pullbacks and gap downs for a lot of these stocks. I mean, if you were to look at, let's take a look at some of the other stocks. So we're gonna go step by step. So let's go over to CCIV. Down 33%, and I know that their deal came in a little bit overvalued, not so overvalued, but came in at a much higher valuation than expected at well over 24 billion. Earlier, they were somewhere hoping between 12 and like 15 billion dollars for that pro forma equity value between Lucid and CCIV, and came in much higher. And the price point which it came at was around $40, and it's trading roughly at that level. And this was after hours, came in at like 5:30 p.m. yesterday Eastern time, when we heard more about it, and then it absolutely got slammed all the way down to like $38, $39 per share, and that's exactly where it's trading right now. QuantumScape down over 7%. Visa still kind of handling that blow, down about 74 basis points. CVS down a little bit over 1%. We've got Switchback Energy down over 7%. They actually have the merger vote on February 25th. So it's probably going to be this week, right? It's actually, yep, it's going to be on Thursday. So they've got that going down on Thursday. So make sure you vote if you had the shares prior to December. Facebook down a little bit over 1.5%, almost 1.5%, coming all the way down to our support at 255 pre-market. Absolutely crazy. Netflix down almost 1.5%. We've got Baidu down over 6%. Google down over 1.5%. We've got Amazon down over almost 2%. Trading as low as 3,080, 3,090 levels. This is the support that we had talked about in our last night's video, right? So definitely pretty significant correction for the markets. Twitter down a little bit over 3%. We've got Microsoft down over almost 1.5%, coming down from a weaker and weaker RSI, something that we discussed in our market update. It was going on Google, Twitter, and Microsoft and Nvidia. We're gonna look at where Nvidia is, but these were four stocks that were basically surging higher on a much weaker relative strength index, right? It didn't make sense because the move was coming in on low volume. The move was coming in at a much weaker RSI reading. So this was something that was kind of like, in hindsight, if you were to think about it, like this is something that we were expecting. It's just like when something happens in the moment, you kind of, you have to kind of realize that, this is something that you were expecting out of the market, right? This is not something new. Apple down a little bit over 2.5%, trading as low as 122 right now. And this right here is actually the complete analysis for Apple. Let's go over to the 4-hour chart. And we were talking about how Apple is trading inside this downtrending channel, right? So we are in a very, very weak situation right now with Apple basically coming down to 122 from all-time highs of 145. So definitely, let's take a look at if Jerome Powell is on board. We've got, let's see, analytics. We've got 438 people watching. Let's see if we can get up to 200 likes. Thank you so much. I really do appreciate you guys' support. Let me see who's talking right now. So let's see if there's anything interesting for us to look at.
They raised the dividend, and what I noticed is not so much the really odd pandemic-adjusted comparable sales kind of traditional retail, John. It was the ticket price. When you go in there, John, and I know you do, to buy your 2x4s.
They're talking about the Home Depot, like EPS and revenue. I think they were reporting this morning, but still, Apple down a little bit over 2.5%. We've got Square. Square is actually taking a huge beating, down over 5%. It actually was down a little bit more than that. Came all the way down to our support, I believe, at 244, 245. So let's see, the low for this candle was as low as 247. So definitely quite a significant blow to the markets right now. And this is mostly in that high-tech, high-growth sector because of the rising yields. Because that's basically, is pulling back on the valuations, right? Definitely. But definitely affecting a lot of those high-tech growth stocks right now. So which is why, we read an article yesterday how ARK ETF, flagship ETFs like ARKK, ARKQ were down substantially because of the majority of the holdings in Tesla and some of those other stocks as well. Right, let's take a look. Palantir down a little bit over 6%, coming down to our pre-market support at $25. So again, the low for this candle at $25.17. So a lot of selling pressure, a lot of weakness in the market right now. And some of those support levels are actually getting validated pre-market. So simple example to give you guys is Amazon. So Amazon, we talked about 3,080, 3,090 levels. You guys will notice that the wick is right exactly at that level, right? So we are coming down to that level as well. And then you guys will notice at Apple not so much. We still have a little bit more room to the downside. Again, 120 is going to be the next support to watch, below 124, which seems to be getting kind of broken right now. But I will see where where Apple opens when the market opens, right? So let's move forward with Palantir. We covered that with Alibaba. Let's see where that's trading, down about 2.5, almost 3%. getting validated at 240 and 246. Right now, those are going to be the two levels to watch for Alibaba right now. Shopify, I think it's down close to 6%, so pretty significant sell-off for Shopify as well. From highs of $1,500, we are down a little bit over 13.5%, almost 14%. So definitely very, very severe pullback for them as well. Qualcomm's down a little bit, almost 2.5%, breaking down. So Qualcomm is one of the stocks that is breaking down below that support, and it's definitely pulling back. I actually don't have a support for this right now, so let me just mark that really quickly. So Qualcomm, the next one would be at like 132-ish, 130 levels. So right there, previous resistance, we kind of got rejected, we pushed up, broke out, so that right there would be potentially a level where we can have that selling pressure get exhausted. So here's the thing, guys. Like this is first of all, I want to mention this is normal in the markets, right? We have the yields rising, and people are moving to much riskier assets, right? So bonds are becoming a little bit more attractive. Those valuations are getting a little bit suppressed. So that's what's happening in the markets. Just so you guys know why this is happening. And when you couple that with the sector rotation and moving towards some of the financials, energy, industrials, you take money out of tech, you take money out of growth, like companies like Dropbox, Shopify, Roku, Netflix, Tesla, AMD, Amazon, Nvidia, like those companies that basically drive the broader markets. And the money flow is going over to different sectors, different industries. And that's exactly why we're seeing such a significant pullback for these companies. Now, in my strong opinion, these are still the companies that are potentially long-term holds for myself. Now, of course, you may be in a different situation, but that's exactly what's happening right now in the markets. And what needs to happen is we need to absorb this sell-off, right? That's just no other way to put it. We just need the selling pressure to get exhausted, right? This is something that needs to just kind of surpass, and then we need to consolidate, right? That we need to stabilize the prices. That's the most important thing, because the longer the volatility persists, the worse the sell-off is going to be. So what needs to happen is we just need to have the stabilization for most of the stock prices so that they don't continue to drop. And that's something that we talked about in our last night's market update as well. Nvidia down a little bit over 2%, so pulling back down to 562. And then kind of validating that $558 support pre-market. This is something that we discussed in my last night's video. So definitely pulling back down to that level as well. Twilio is down close to 4%, so it's actually gapping down, trading all the way over here. We've got PayPal down a little bit over 4%, breaking down some of those support levels. So pretty significant sell-off, similar to what we were seeing for Square. AMD is another stock that I'm very, very bullish on. It actually came all the way down to that $81 support, kind of inside this lower high, lower low pattern. This is something that we were talking about for advanced micro devices, and I talked, I would not be surprised if we see AMD test all the way as low as $81. The pre-market low was, $81.44. So definitely a very significant pullback for AMD as well. Let's see who's talking. We got an advertisement. So, all right, Unity Software down a little bit over 5%, so very significant pullback for Unity Software as well. A lot of weakness. Let's see, Fubo TV down, oh my god, almost 13% for Fubo TV. Jesus. Breaking down below this $39.40 support here. ARKG is going to be their genomics ETF, trading all the way as low as 97, so below $100 per share. Coming all the way down to that support. And again, ARKG, ARKK. Let's take a look at where ARKK is trading. So down a little bit, almost 5%. So again, a lot of volatility, a lot of selling pressure for ARK Invest ETFs as well. 2020 was a pretty significant year for them, but now they are really, really taking a hit right now with February's. And they actually picked up more shares of Tesla. So let me see if I can bring that screenshot up. They actually supposedly they picked up 238,000 shares of Tesla yesterday on the dip, and they also picked up a lot of Palantir, which let's take a look at where Palantir is trading. So Palantir is down a little bit over 5.75. Yep. So we looked into that, and then let's look at Lemonade. Lemonade down a little bit over 3%, breaking down below 140 support. Neo is down a little bit over 6% as well. So pretty significant sell-off all around. Let's take a look at where we are with the stream. So we got 604 people. Again, let's see if we can get over to at least 300 likes. Make sure that you drop that like button. It really helps out with the channel. And also, if you're new to the channel, make sure that you subscribe as well. So, all right. Let's read some of the live chat comments. Any bad news in the market? Not really. It's mostly about the 10-year yield and cyclical and sector rotation that we're seeing. Brandon, let's take a look at NEO and what we discussed in our previous videos. So this is the volatility on the S&P 500 for everyone who is joining. Welcome to the channel. We cover a lot of fundamental and technical analysis on the channel. We cover a lot of individual stocks, but most specifically the channel has been focused around tech and some of those high growth stocks as well, which are right now taking a lot of beating. But this right here is the 10-year yield. Right, it's behind that. One of the biggest reasons why we are seeing this big shift is the 10-year yield. Powell will speak at 10 a.m. Eastern, so we've got a long way to go. So right now, in the next 3 hours is when Powell speaks. So we'll see if the stream is going to go on till then. But this right here is going to be the price of Bitcoin. Again, we're down a little bit over 14%, and a lot of the moves are for Square and Tesla are coming partly because of Bitcoin. This right here is going to be Apple. Seems like we are seeing some type of a pre-market recovery. We're pushing up, just down a little bit over 1.5%. Again, we are seeing spikes in volume. So, in my strong opinion, a lot of institutions out there may see this as a really good buying opportunity in the short term because, again, these prices are down. Like, if I were to go over to Apple really quickly, this right here is going to be the price of Apple, and you'll notice that we had a very similar reaction, right? It was a very similar pattern, and this is going back as far as September. If you guys remember correctly, September 2020, we saw a very, very similar pattern for a lot of stocks out there, right? There was a lot of fear and a lot of panic. You'll notice that highs from 138, we were all the way down to 103, and that was a drop of 25%. These are things that's really important, at least for everyone to be reminded of constantly, because we often forget that this is not something new. This has happened in the past. 25% drop for Apple. Can you guys tell me exactly what the drop was for Tesla? Let me know in the live chat. How much did Tesla drop back in September? What was the drop for Tesla stock? Let me know in the live chat if you guys know exactly without looking how much did Tesla drop. I just want to see how many people actually remember that drop for Tesla during that time, right after they did like a $5 billion capital raise, right after the stock split, after running up to new all-time highs. I think they were trading at well over $500, but let me know how much did you guys know? How much do you remember? Perfect, 40%, 34%, 41%. Yeah, it was roughly at 36 to 40%. You guys are absolutely right. And that's very normal. I mean, 40%, like imagine what was going on back then, right? And Tesla right now is down. Let's take a look. So Tesla right now is down. Pre-market, we are down substantially. But this right here was the sell-off from back in September. You guys are absolutely right and on point. It was like 45 to 40%. So right here, a little bit over 41%, right? And right now, if you were to look at from all-time highs, where we are trading, it's a very similar reaction, right? We are down a little bit over 26%, and this is in a much longer time frame. That drop happened in the matter of 7 days. If you guys remember it, this right here was 7 days. So this is coming in from like September 1st till September 7th. So that first week of September was absolutely brutal, right? You're absolutely right. So, and this is in a much longer time frame. So something that we had discussed in my last night's video is stabilization. That's the most important thing for these prices right now, because volatility is sky high. We need a lot of consolidation right now in the markets, right? Because if we do see stock prices continuing to pull back, we're going to see a lot of fear and irrational selling. That's what we're seeing right now in the markets, is a lot of fear driven, a lot of stop losses getting triggered, a lot of margin calls getting forced because margin debt was also at the highest level since in a very long time, probably at an all-time high, right? So that was another thing that's potentially causing this type of a pullback, is because a lot of people basically locking in some profits or paying down margin, hence selling some of the stocks to basically bring down that margin debt that they have on their accounts. So that's another thing to consider. And again, it can lead to a lot of overreactions, a lot of irrational selling that leads to a lot of discrepancies in the markets, a lot of opportunities, and a lot of sort of price arbitrage, so to speak, right? Because that may seem like a really good deal, 5 years from now, if you were to look back and look at Tesla trading at 681 right at this second, you may think to yourself, wow, why didn't I buy more, right? That could happen. Now, I could be wrong, it could go down, but I'm in it for the long term, for at least for the next 5 to 7 years, to basically see how their autonomous driving plays out, right? What that scenario looks like and how we're going to see them basically kind of move into this AI world, and potentially even solar and everything else. So let's listen to what
where we are right
Bloomberg
now.
has to say.
Typically, we always make this about us, Wall Street, financial markets, and sometimes these things just sort of rear off somewhere else. And it's about individual lawmakers trying to make their little YouTube clip to send out to their constituents. But today's important. Let's bring in Michael Shell, Market Field Asset Management CEO. Michael, just talk to me about what you expect from the chairman at 10 a.m. Eastern.
I expect him to reinforce the view of the Fed that their main goal is to create full employment across the racial divide. And that really seems to be the message that Powell has been given since Jackson Hole. I think he will, allow for the fact that vaccination has a good chance of changing the medical emergency over the course of 2021. But I think he's going to be steadfast in his view that the Fed is on the right course. And I would be very surprised if he, hinted at a reappraisal of Fed action over the next few months.
Michael, how do you view this rise in yields, given the fact that, as John was mentioning, we haven't seen a move higher in tandem with inflation expectations?
I think I'm of the view that we are transitioning into an inflationary boom. I've had that view for several months, and I view the move higher in yields as part of that. Nothing happens in unison. I've never been a great believer that over the short term, you can look at inflation expectations within the bond market and derive anything. It's really just a function of what particular flows are in place. But I heard Tom's comments and John's comments earlier. Yeah, I do think we've gone from a deflationary, abnormal, depressing yield curve to a much healthier variety of one. And I think that over the next few months, we'll transition into a different kind of worrying yield curve, which is a yield curve that worries that the Fed is losing control of inflationary pressures which are building in the U.S. and the global economy.
So is there some sort of inconsistency in the markets for a reflation trade?
So guys, the most important thing for Federal Chair Jerome Powell today is going to be inflation, right? How do we control that? Because they've already made their point very clear. They've already mentioned it to us that they want inflation around 2%, right? That's going to be CPI. I don't know if it's going to actually show up here because I've really never looked into the inflation here. All right, let's take a look at this one. This is something else. But the whole point for them to actually control inflation is going to be making sure that asset prices don't get out of control, right? We don't have a situation where we have either a deflationary situation or hyperinflation. They want to keep that in check at around 2%. Now, of course, with a lot of money supply, with a lot of printing, fiscal stimulus, so to speak, and another 1.9 trillion coming in, there's going to be a lot of flow of money in the markets, right? As soon as the economy opens back up, there's going to be a lot of spending, consumer spending. We also know that savings rates are at near all-time highs, or were near all-time highs, because the balance sheets for for Americans look a lot better than they did before the pandemic with all this fiscal stimulus, and housing debt is also, I read up somewhere, there was at a 4-decade low. So definitely, inflation is something that to keep a close eye on with the Federal Chair, because how we control that is basically going to lead to where the markets go in the future, right? And of course, the yields are going to get affected by it as well. But let's take a quick check. We've got Bitcoin now down almost 14%, trading as low as 46,500 and some dollars as of this time of this video. VIX is up a little bit, close to 5%. We've got Apple down a little bit over 1.5%. We've got the 10-year yields basically flat right now, trading as high as 1.367. So make sure that you smash that like button. I really do appreciate you guys' support. We got 865 people watching. Let's see if we can get at least 400 likes. I really do appreciate you guys' support. Again, thank you so much for joining in and spending the morning pre-market with me over here. So Nina, what does that mean? So what are you referring to? I would be happy to answer your question. Just let me know what you mean by that or what you're asking about. So all right, let's take a look at some of these live chats. So is Apple a good buy right now? In my strong opinion, for the long term, really depends on what time frame you're looking at, because in the short term, there's going to be a lot of volatility. We have to kind of stabilize the prices. And for Apple, we've already talked about 120 being the next support. Looks like we are trading below 124, but that's going to be a really critical support level for us to watch, whether we gap down, whether we gap up, and where exactly we open, whether above 124, if that level continues to get validated, or if we're going to come all the way down to 120 levels. It looks like we are potentially headed down there, and that is also going to be kind of like the lower low for Apple stock inside this downtrending channel. So Apple needs to kind of consolidate and then trade in this uptrending channel, similar to what we saw back in September. So you'll notice that it was making some lower highs, lower lows. Again, this right here was a downtrending channel until finally it stabilized at around $102, $103 per share, and then started pushing higher, making higher highs and higher lows once again as well. So, that's just my 2 cents on Apple as well. It's 9 p.m. here in Korea, so thank you so much for joining in from there. I really do appreciate it. And all right, let's take a look. Let me just reduce this. All right, there we go. Do I like PayPal? I actually love PayPal as a fintech, both Square and PayPal over the long term. I think a lot of it, and correct me if I'm wrong, but a lot of companies got tied to cryptos very, very quickly, because you'll notice that PayPal, they opened trading for cryptos and Bitcoin. Square, they invested 50 million in Bitcoin, and they also opened it up through Cash App for people to actually buy and sell Bitcoin. Tesla invested 1.5 billion in Bitcoin. So in my strong opinion, since Bitcoin is so volatile and a lot of the prices are now somewhat, to some extent, not a huge, but Tesla's only about a 1.5, maybe 2% market cap was how much they invested in Bitcoin, but it's having some effect on the markets, right? It's not like, if Bitcoin, it's during days when Bitcoin keeps surging higher to new record levels, we see the markets also do well. But then when it's down the last 2 days, so if I were to kind of bring up the 2-day chart, or let's go over to like the weekly chart, you'll notice that since Bitcoin is down the last couple of days substantially from all-time highs, so this right here, highs of 58,000, while at the same time we're seeing big tech and high growth take a pretty significant beating, while we're seeing the yields start to go up as well. And this is simply a flight to safety or flight to equity sort of phenomenon, because when yields are going up, there's more risk-averse traders that want to park cash into bonds that are going to be moving away from Bitcoin, which was seen as a hedge as against inflation, which is obviously taking one of the reasons why it's dropping so much is because of the rising yields. So we'll see where everything ends up over the long term. Like, we have to really understand what 2020 is going to look like. There's been a lot of studies, and even Kathy Wood from ARK Invest said that be prepared for a doozy correction in 2021, and that's probably what we're seeing right now. And let me see if I can bring up that chart that we talked about in our previous videos. And again, for new people joining, this is something that's really important for you guys to understand as well, because this is what controls the market right now. I mean, we know about this, but again, I want to re-emphasize on this that, this is the entire map, the heat map of the S&P 500, and the square, the level of the square represents the market cap, right? It's how much of an influence they have on the S&P 500. So if we have Amazon, if you have Tesla, if you have Apple, if you have Microsoft, if you have Google, Facebook, some of those companies are dropping, including Walmart. That's going to bring the broader markets with it, right? Whether you like it or not. As opposed to the Dow Jones, which is more price weighted, the S&P and the NASDAQ, they're market cap weighted. And since these companies have a pretty significant market cap to influence the broader markets, even if energy and financials go up, which is what this is going to be. So this is financials. You guys will notice that we have so much greenery over here. This right here, so much green. This right here, energy, so much green over here. So even if they keep going up, regardless, unless we have a pretty significant move to the upside for industrial, for energy, financials, and tech stalls, we'll see the broader markets pull back as well. And that's exactly what we're seeing, right? Tesla down 3.74, 3.89. This is from the last week. This is 1 week performance for last week. This is not this week. This week will be, oh my gosh, so brutal already. But let's take a look at the weekly chart. And by the way, I think these right here are going to be some of the earnings that are coming up for February 22nd. So let me see if that's actually right. Yep. So this right here are going to be some of the earnings. So Tuesday after the close. So today we've got Square reporting. Let's take a look. So today is Tuesday. We've got Square reporting. We've got Upwork. We've got Intuit. We've got Hyliion. I know that a lot of people are going to be interested in Hyliion as well. Let's see. We've got Macy's. Home Depot is actually reporting. They were talking about it on Bloomberg as well. Speaking of, let's take a look at what they're talking about. They're just talking about the futures. And then tomorrow and Thursday are going to be some really interesting days. We've got Nvidia, we've got Teladoc, Jumia. I know that Jumia, a lot of people are going to be interested in the e-commerce play there. We've got TJX as a recovery play. We've got Redfin is going to be a really big one as well. And then Thursday is going to be pretty significant in terms of the volatility and the earnings. This right here is going to be Salesforce. We've got Rocket Companies, Etsy, Beyond Meat. We've got Virgin Galactic, Nikola, Airbnb, and we've got Wayfair, Best Buy, Domino's, Plug Power, and Moderna. Actually, let's take a look at where Plug Power is trading, because I know that they were down pretty significantly the other day. So let's take a look. So, all right. Plug Power down a little bit over 6%. Yesterday they were down over 13%. So definitely quite a significant sell-off for Plug Power as well. So, all right, let's talk about the earnings again. So, and then on Friday we've got DraftKings reporting. We've got AMC Networks, which I know a lot of people are going to be very interested in. So this right here is the earnings week ahead. And today we've got Square, Upwork. They're reporting after the close. And it's pretty severe pullback pre-market already for these companies. Let's take a look at where Home Depot's trading. So Home Depot's down a little bit over 2%. I'm not really sure how they reported, so we'll check that out in a little bit. So everyone is down, hold strong if you can, guys. I agree. I mean, there's going to be a lot of people that are going to be down, right? It's just how the markets work. You can't expect to be right, and you can't expect to win, and you can't expect to have green days every single day. There's going to be days that are going to be as brutal as this one. And regardless of how bad that may seem in the short term, we always need to have a much broader picture on the markets, right? And in the moment, I know it can be very unfortunate. In the moment, it can be really, really, gut-wrenching that you're down like thousands of dollars, in some cases hundreds of thousands of dollars or a few $100s, whatever the case may be. I know it can be really bad, right? I know I've been there. I'm personally am experiencing it, but it's just how the markets work, right? This is not something that's new. This is not blindsiding the markets. This is something that we were expecting. The yields are some of the big reasons why we're seeing such a significant move in the equities market. Everyone talking about selling, don't you idiots? Time dollar cost average. And I know there's been a lot of comments on the YouTube channels and a lot of places where there's a lot of people basically putting out a very, very bearish picture on the markets, basically saying that this is going to be a pretty like a more than a March sell-off, like over 30, 40, 50%. But in hindsight, this may seem like a really good dollar cost averaging opportunity for a lot of stocks out there because everything has been in red. Everything except for financials, energy, some of those plays. Everything else has just been in red. I mean, NEO has been absolutely getting killed. They've got earnings coming up on March 1st, and they're already down pretty substantially from our all-time highs of over $68. We're down a little bit over 30%. And actually, NEO had a very similar reaction in September as well. Oh, this was actually in November when it was down. When it was down another 33%, right? Same exact move down. Consolidated sideways before pushing higher, making new all-time highs. So we're seeing a very similar pattern for NEO right now as well. Twitter, Bruce, actually we went over that. I think it's down a little bit over almost 2%. Still kind of validating that $69 and even came down to that 50 EMA at close to $66 per share before pushing higher. Thomas, that's actually a great question. What do I think Apple's average compounded annual growth rate will be for the next 10 years? I actually have a really surprise video coming out this Thursday, so make sure that you watch that. It's going to be a very, very interesting video. We're going to cover Apple, and we're going to go into a lot more detail and a lot more depth in Apple and what the growth story looks like for that company, right? You know what? Let me just bring that up really quickly. So here, let me take a look. So we've got. Oh, by the way, I want to talk a little bit about this as well, because this right here was the article or the tweet that two tweets that basically came out for ARK Invest. Again, not really sure how accurate they are, but these are some things that I read yesterday. So on 2/23, that Cathie Wood bought $200 million worth of Tesla today, and this right here were the three ETFs that it went to, 273 or 280,000 shares roughly that they bought yesterday. And 184 in the ARKK, 60,000 shares in ARKW, and 27,000 in ARKQ ETFs for Tesla on the dip, right? Tesla is still down pre-market, so not really sure if they're going to buy more, but it's pushing higher, right? We were down over 8% at one point, and we are pushing higher basically having this dip getting bought up. So if you go over to the 30-minute time frame, you'll notice that this right here, massive push. And I actually even mentioned, by the way, if you guys want to join our Patreon, the link is going to be down in the description below. You'll get access to my TradingView charts, which will automatically sync over to your charts as well. And I also mentioned that if Tesla were to break down below 695 or 700, 655 is going to probably be the next support that we need to watch. So 657, 655, kind of like around that level. We are seeing some type of a bottom bounce, and look at this 30-minute chart. Such a huge sell-off, such massive buying. If you were to look at the volume, it's still relatively low volume, right? Pre-market, because obviously the volume is substantially lower during pre-market hours, but 200,000 shares purchased here, 21,000 shares here, 89,000 shares here, and 105,000 shares purchased here. So we are seeing some type of a recovery. I mean, NASDAQ was even green up until like 2 in the morning or 3 in the morning, and then it turned severely red, probably because of the yields that were continuing to push up higher. But if you were to look at the Qs and the S&P, let's take a look at them really quickly. So we've got the SPY recovering to some extent, and we've got the Qs also pushing higher to some extent. We're down just about 1.5%. So again, staircases up, elevators down for the broader market indices and for a lot of individual stocks as well. So, all right, let's take a look at how many people we have watching. So 1,100. So again, make sure that you drop that like button. 500 likes. Thank you so much. I really do appreciate you guys' support. Let's see if we can get over to 500 likes as well. What's going on with Palantir? Let's take a look. Palantir should be down as well. I mean, but regardless, those support levels still some levels to watch. $25 still getting validated. So that right there is going to stay put as a really Palantir is easily, in my opinion, a $45 to $50 stock, right? It's over the long term. If you were to kind of look back 5 years from now and look at Palantir at 25, 26, it can seem a really strong buying opportunity, in my strong opinion, because it's easily with data analytics, with a lot of government commercial contracts in place, with a really strong CEO. Although I've been reading that Peter Thiel and the CEO has been kind of trimming their positions. I'm not sure exactly if that's true or not, so don't quote me on that, but I did read that there was some insider selling as well for Palantir, but ARK Invest has been picking up more shares as well, right, for Palantir. So $25 is still getting validated pre-market, something that we discussed in our daily market update. Last night I put it out, went over Palantir, that $25 is going to be the first level of support, all the way as low as $22.50, right? That's going to be the next level of support, because if you were to kind of look at this pattern right here, let me reduce the VWAPs. So you'll notice that this right here was the exact level that we came all the way down to on January 4th before breaking out, pushing to new all-time highs over $45, $50 per share. And this right here is a pretty significant sell-off with the lockup period expiration, with the earnings that came out. Strong earnings, in my strong opinion, but of course they missed on EPS, reported a negative 8 cents per loss per share. But this is a pretty significant sell-off, right? Very overblown, down a little bit over 42%. The RSI, the MACD was very overextended as well. So, $25 is a support pre-market. We'll see if that level holds up during the day, and then $22.50 is going to be the next support level to watch if for any reason we break down below that level. So, all right, let's take a look at NEO really quickly. So NEO again down a little bit over 8%, so very severe pullback for NEO stock as well. And actually, let me go over to my analysis from yesterday that we covered on NEO stock. It should be over here, and we're gonna go over to the 4-hour chart. So yeah, I mean, we're breaking down below $50, right? No doubt about that. This is a pretty significant breakdown, and I've mentioned that the next support is going to be actually $38 is going to be the next level of support, but there is going to be somewhat of some demand at $43, $44 per share. So if I were to kind of remove these VWAPs, and if you were to kind of come over here, you'll notice that was kind of like the level we were hovering over at $43, $44 right here. And again, validated support here. We broke out. So if you do see any type of persistent weakness some more during the day, keep a close eye at $43, $44 per share for NEO stock as well. So let's take a look at where Bitcoin is. We're down roughly over 13%. The yields down about 0.5%. The VIX creeping up a little bit over 4.5%. Trading is as 24.6. We've got Apple down about 2%. We've got Amazon also down a little bit over 1.5%, trading as 31.31. So again, we're seeing a pretty significant sell-off, but this is very normal in the markets. For everybody new joining, thank you so much for joining in. We're probably going to do this live stream for another hour, maybe an hour and a half. We cover a lot of fundamental and technical analysis on the channel on a lot of individual companies, broader market indices, a lot of different trends, indicators. We look at a lot of different things. So if that's something you're interested in, definitely consider subscribing. I really do appreciate your guys' support. Make sure that you hit that like button on the stream so it gets pushed out and recommended to other people who are watching, who could be watching as well. So let's see if we can get over to 600 likes. I really do appreciate your guys' support as well. So let's see if there's anything on Bloomberg that's interesting to listen to. All right, they're talking about the 10-year yields.
It was interesting to hear from Mike Wilson of Morgan Stanley on this program.
Let me know if you guys can hear this okay, right?
Was with his 3,900 year-end price target, because his call ultimately is not about the index. It's about the churn, financials, energy, industrial starting to do really nicely through 21.
Yeah, and Ben Laidler, again, I mentioned this earlier, but I think it's a distinction, John. I don't have an opinion here, but are we rotating or are we catching up on the cyclicals?
I've never heard a Tom Keane opinion.
Never. I don't editorialize.
Nope,
never.
Absolutely not. Sure.
Never wears bow ties either.
Red Sox
Michael
pitching is
Kushner,
still terrible.
Morgan Stanley, CIO of Global Fixed Income, joining us a little bit later with yields at 135.85 and Chairman Powell coming up a little bit later.
So, Chairman Powell coming up. It's going to be very interesting, guys. I hope you guys are excited. I'm really excited about the market to open today. I'm really excited for the markets to open. And again, so, this is very normal. We're going to talk about a lot of different stocks. I'm going to start putting a timestamp. So we're going to do some more extensive analysis on these. Right now, I'm giving you guys a market update on where we are sitting. Pre-market, let's take a look at these SPYs and the Qs. So Qs down just about 1.5%. We woke up and it was down a little bit over 2%. Right now, we are recovering a little bit. It was trading as low as $315 per share. Pre-market, we have already recovered a little bit over 80 basis points. So definitely quite a significant recovery pre-market. Let's take a look at SPY, which is going to be the ETF that tracks the S&P 500. A very similar situation. We were down trading as low as, let's see, $383, and we are up a little bit over 0.5% pre-market after this huge sell-off, and we're only down about 37 basis points, right? So there's weakness, there's blood on the streets. The only question is, what is everybody going to do about it, right? Are we going to sell? Are we going to hold? Do we have the diamond hands? Or if we're going to buy more, right? That's an assessment that everybody needs to do for themselves, right? Now is the time to manage that risk really nicely and kind of come out on top of this market sell-off. Because back in March, if you were to put yourself back, let's put ourselves back in March. Let's say this is March. What would you want to do in March? Right? If the markets were selling off, if everything was down, right? Now, of course, you can't compare apples to apples because the markets are in a much different state. There's a lot more money supply. The yields are starting to go up higher as well. So it's not a fair comparison. But in hindsight, March was one of the times when everyone should have been buying really heavily, right? Because we've seen such an extended rally. So again, tech and healthcare, if they sell off, they'll bring the broader markets down with them. More specifically, the NASDAQ. The S&P not so much because it's a little bit more diversified, and the Dow Jones really not that much because it's price weighted. Rita, what's going on? Nice to have you on board, so thank you so much for coming in. John, diamond hands, completely agree with you there. Let's see. Let's go over to some ARKK. So we covered that in earlier. So if you want to look at that, please feel free to do that as well. So I'm gonna map out some support levels for a lot of different stocks. Now, of course, this is not financial or investment advice in any way. These are strictly sort of my analyses on where that next support is going to be. And the point is, the whole goal that we're looking for is stabilization, right? For the volatility to subside. That's what we want. We want consolidation in the markets, right? I don't necessarily want the markets to rally. I don't want them to go up. We can simply be okay with some consolidation because that's going to weather the selling pressure. We want that to be exhausted, right? We want the bears to have fun, get away from this party, and just be done with it. So we're going to talk about Tesla. We're going to talk about Apple. We're going to talk about NIO. Let me know in the comments. Let me know in the live chat what other suggestions you guys have, and we will cover that throughout this live stream. All right? So let me know in the live stream what other stocks are we going to cover. So Amazon, we're going to cover AMD potentially. We're going to go over let's see, CCIV. Let's go over to CCIV as well. AMD we already have on the list. Palantir is a good one. Yep. So we're going to cover that as well. All right, so let's go over to all ARK ETFs, right? We're going to cover mostly ARKK, we're going to cover ARKQ, and we're going to cover ARKG. That's going to be big ones. All right, so Li Auto and XPeng will also cover. I mean, they've been beaten down, even though they have earnings coming up, and we've covered the earnings for them. You know, strong AV plays in China. DraftKings is a good one, so thank you for the suggestion. PayPal and Square, definitely good ones. All right, so only one request, a couple requests that I have before we get started here is that you make sure that you drop that like button. We have a little bit over 1,300 people watching, so let's see if we can get over to 1,000 likes. And also, if you like to donate to the work for all the technical analysis, you're more than welcome to do that. Again, you don't have to. I really do appreciate you guys' support, but again, that's an option available. It contributes directly to my time and to the work that I'm putting in. And if you guys can give me the timestamps on when we're going to be doing these analyses so that everybody new watching, everybody new coming in can strictly go to that timestamp and basically have that accessible and then jump over to the live stream, right? If that makes sense. So if somebody comes in and we've already covered these stocks, they can simply go over to that timestamp and watch the analysis for that as well, kind of go over the support and resistance levels for those stocks as well. So let's see if you have anything from Bloomberg. So that's going to be this right here. Still nothing, still ads. Jerome Powell speaks at 10 a.m. Eastern. So we'll see if the live stream actually goes till that far. Right now it's only 7:30. So a lot ahead of us. We got 2 hours until the market opens. The S&P down about 37 basis points. And the Qs are down 1.4, almost 1.5%. So starting off with Tesla, this is actually going to be chart number 2, I believe. Oh, this is the main chart. So we're going to go over to Tesla. So Tesla on a complete free fall here. You know, we are going to actually go ahead and turn $697, $700 as a resistance because that level we're trading below. So again, please let me know if you guys have the timestamp on when we started Tesla, right? So we can basically just go over, put the timestamp in so that people joining in can go over that as well. So 697, 700, keep a close eye at that next resistance because right now we gapped it down, and even the pre-market high. So if I were to go over to the 30-minute time frame, you'll notice that we basically gapped down here. Let's go over to the 5-minute chart. And you'll notice that we gapped down heavily and then we struggled at 695, right? That was a potential support that I'd marked. Now, of course, with the huge gap down, that's going to be the next resistance because we are trading below that level. And again, we are seeing some type of weakness, some type of sell-off during the 5-minute chart. We're down a little bit over 5.5%. So 650 is going to be the next support. 695, 700 is going to be the next resistance. The next resistance to watch for Tesla stock. So going over to the 4-hour chart, we're going to have the next candle open in 30 minutes at 8 a.m. So this is the 4 a.m. till 8 a.m. candle. This is pre-market. So let me go ahead and put that right there. That's going to be the support right over here. Close to 650, 655 levels. That's also like a pre-market low, pre-market support. We're going to see if Tesla actually holds up. But from an RSI, MACD standpoint, I mean, the RSI is just completely overblown, trading as low as 60, right? The MACD aggressively selling off, trading below the signal line. So that right there is going to be the next support level to watch. We are already kind of trading in this downtrending channel, making lower highs and lower lows. So that right there will potentially be the next support at 650 levels, and 700 is going to be the next resistance. The important thing for Tesla is consolidation. We need to find a base. We need to stabilize the stock price so that we can see some consolidation at 650 levels, find a support, and then eventually make some moves to the upside and potentially retest 695, $700 per share. And the reason why 650 is now important, well, the reason why 695 was important was because it was a previous resistance, right? Coming in from December 18th. In fact, you will notice there was a pretty significant volume at that level as well for Tesla. So old resistance, potentially a new support, but we did gap down. So the next support is going to be sitting right here at the previous resistance coming in from December 2020, sitting as low as $650, $655 per share. So again, to give you guys a very quick update, we've got 695, 700 as a resistance to watch when the market opens, and 650 as a support. It's a pretty significant variance, but Tesla is also a really volatile stock. So guys, let me know what timestamp this is so we can put that right there, and then we'll jump over to Apple. And then we also have a lot of stocks to cover, so we'll see how long that takes us. So we got 1,400 people watching. Again, let's see if we can get over to 700 likes. I really do appreciate you guys' support. And let's see if there's anything interesting going on Bloomberg. So, technology headlines. All right, we'll kind of circle back to that. All right, so let's go over to Apple. So Apple also down a little bit over 2%. The interesting thing about Apple is to see whether we open above or below 124, because that was the support that we talked about in our daily market update from yesterday. But we also can't take away from the fact that we are trading in this downtrending channel, and there's a lot of resistance levels to watch for Apple stock right now. From our all-time highs, we are now down a little bit over 15%, almost 15%, trading as low as $123. And there's something that I want to mention about Apple stock. Let me see if I can actually find that. So let me pull that up here. So this is actually came out very recently that I wanted to go over for Apple. So this is an article that came out, I believe, February 22nd, and I read it on Twitter first, and then I did some more research. So why Apple will hit a $3 trillion market cap by the end of 2021, and this is coming in from Wedbush analyst Daniel Ives. He basically had a price target. So Apple shares are on track to hit another milestone in terms of market capitalization, according to Wedbush Securities. Daniel Ives has an outperform rating and a $175 price target on Apple shares, with the bull case at $225. What do you guys think about that? Let me know in the live chat. What do you guys think about this bullish thesis on Apple? And we're going to go over into some more details on what that thesis looks like. But what do you guys think about this price target? William, thank you so much. Yeah, make sure that you hit that like button. I really do appreciate you guys' support, and it really pushes this stream out to other people as well. But top left, let me take a look. Oh, thank you so much. That's really helpful. So we started Tesla, I want to say, yeah, 544. So everybody who's new joining, 544 is going to be the timestamp if you want the Tesla analysis on there. Good price target. So the thesis is that after Apple's jaw-dropping performance in the December quarter that was reported late January, the shares of the company have taken a breather. I've said the weakness, the analyst said, in the short-term blip on the stock's upward trajectory. So again, keeping the long-term view, keeping the broader markets in perspective, that this is a short-term blip on the stock's upward trajectory. The positive news, or the positive view, is premised on Wedbush Asia supply chain checks, right? Those are going to be the manufacturing, the potential deliveries, which Apple is supposedly, arguably, you can debate that, but is on track to having the best year or the best iPhone since 2014 when they released the iPhone 6, which is the best-selling smartphone out there. It's the best. It's the second best-selling phone after the Nokia, but it's the best-selling smartphone ever in the world, with I think over 230 or 240 million deliveries. Now you'll notice that robust strength in iPhone 12 supercycle rest of 2021, given the fundamental strength we are seeing for the supercycle, coupled by further re-ratings on the horizon. We believe Apple will hit $3 trillion market cap by year end, by 2021. We're only, 10 months away? February is almost over, 10 months, $3 trillion. Apple's, after this pullback, is probably going to be sitting at roughly $2 trillion, a little bit over $2 trillion. So that's a lot of inflow for Apple's market cap. That's like, 66% upside, I believe. It's a pretty significant upside. So based on the current trajectory, or it's like a 50% upside. So based on the current trajectory in the bull case scenario, Apple has the potential to sell more than 240 million iPhones. So literally just what we just talked about. 230 million is what they sold back in 2014, or 2015, right here it says 230 million units the company sold in 2015, and they are on track to hitting 240 million iPhones for fiscal year 2021. We know the install base is well over 1 billion for the iPhones alone, and the overall total devices are a little bit over 1.5 billion. So I don't think I have that presentation, but let me see if I do. Is it Apple or is it Microsoft? It's probably from Microsoft. But I just want to write that down for you guys because I feel like it's going to be very, very interesting. So right, this is going to be sort of like our analysis from, I believe, from like back in when the earnings were coming out for Apple stock. And I want your guys' view on this, right? I want you guys to tell me what you guys think about this in the live chat. So this is Apple's current trajectory, right? We know that Apple's iPhone summary sits at total devices sit at 1.5 billion as of fiscal year 2020. And iPhone is going to be a little bit over 1 billion. That's going to be the install base for Apple. And this has been the curve for the last 12 years, for the last 13 years since 2008 when the first iPhone was launched. You guys will notice that we've been on this steady increase for the number of iPhones that are being utilized or the install base for Apple. Now moving forward in fiscal year 2021 and in the future, where do you guys see this? Do you see this as a growing curve, bigger install base with more new iPhone users? Or do you see this plateauing curve where you see the growth is flat, there's no more iPhone users, but there are also people that are not ditching the iPhones or iOS for Androids? So those are going to be the potential two scenarios. Now, of course, we don't want to see the third scenario, which is going to be a declining curve that basically is going to go from 1 billion to back down to 900 million to back down to 800 million iPhones, meaning that people are no longer using iPhones or ditching it for Android products, right? So what do you guys think? Growing curve or plateauing curve for Apple in the future, right? What is going to be really, really important for Apple moving forward, right? We already have over 1 billion install base for iPhones. And total devices 1.5 billion, and of course with the super cycle that's arguably going to be there for iPhone 12 with iPhone 12s and with a little bit over 240 million iPhones sold, that's going to essentially have a growing curve again. So keep in mind that Apple is making its first car, agreed, and that's something that we are going to talk about on Thursday and Friday as well, right? We are going to break that down. I've got a special video coming out, so keep in mind that that's going to be very, very important. So we'll see, plateau, we've got plateau probably, we've got plateauing curve. So a lot of people saying plateauing curve. So you guys basically think that the growth is going to flat out and we're not going to see as much install base for Apple. And another thing to consider is that Apple's model is switching over to an upgrading model. So, the iPhone business has turned into an upgrading business. So there's not a lot of new people watching or getting new iPhones as opposed to existing iPhone users just upgrading their iPhones, right? So Apple will still be bringing in 20 to 30 million new iPhone users each year. The percentage of overall iPhone sales going to new users has steadily declined. For fiscal year 2020, iPhone sales to new users will likely have accounted for less than 20% of overall iPhone sales, an all-time low. So that right there is going to be really, really important as well for us to watch, because with about 350 million of the 950 million iPhones worldwide currently in the window of upgrade cycle, I think that will translate to an unprecedented upgrade cycle for Apple. Now that's obviously going to be reported in future earnings, is going to affect Apple's stock price. We're going to see how that does, but average selling prices are also shifting higher due to the product mix. Actually, you made a really good point. The timestamp is total video time minus wherever you put the cursor, so it's not 542. Mohit, can you actually tell me what that timestamp is for Tesla and for Apple so I can put that on there? Carlos, growth in services sector, highest profit margins. I completely agree, and that's something we actually broke down in this report as well. If you go over to the financials, you'll notice that total services are steady 16% year over year increase, and the margins are much, much higher. So that's something that I'm really, really excited about. And this right here is, again, the Apple iPhone summary, the low 40 million range with potentially an upward bias. And this right here is going back as far as 2014, 2015 that I mentioned earlier for iPhone 6, which was one of the best selling iPhones. So you'll notice that if I were to kind of extend this, what does that tell us? We had the Nokia 1100 as the best selling phone in 2003 and 2005 with over 250 million phones sold each. I had one of those Nokia bar phones. But Apple iPhone 6 and iPhone 6 Plus touchscreen smartphone is the best-selling smartphone with 230 million iPhones. Now, the projection is for the iPhone 12 to be around 240 million or 230 million. So that's going to really, really have this growth super cycle that a lot of people are projecting for Apple. Whether it's going to happen, we have to wait and find out, right? It's going to be very, very interesting for us to see if that actually happens or not. But so this right here is another really, really important metric. So Apple's EV, right? Apple Car is going to be a big, big part of Apple's growth story in the future. And if Apple gets 5 to 10% of the share, this could represent another major growth pillar within Apple and add $30 per share alone to Apple's stock price. So do you guys know how much that EV market is going to be, right? What is the total for the EV market over the next decade? What do you guys think is that number? It's in the trillions of dollars. What is the total market going to look like for EVs, electric vehicles, in the future? That's going to be the total addressable market for electric vehicles. Let me know in the live chat, what do you guys think about the total EV market for a lot of companies out there that are in the business of making electric vehicles? So let me know what you guys think. What's that $1 trillion number that's going to be for the electric vehicle market in the future? Over the next 10 years, we've got so many governments and countries around the world basically spending so much money on electrification, green renewable energy. 15 trillion, we've got $1 gazillion, 69 trillion. Love it. 69 trillion is awesome. But as far as I know, it's going to be a $5 trillion market, right? It's going to be a $5 trillion market. And even if Apple gets 5 to 10% of that market, we're talking about $500 billion in future revenues for Apple within that space. So that equates to about $30 per share for Apple that they could potentially add. Now, of course, they need to tell us who they're partnering up with. Are they doing this themselves, or are they going to partner with somebody else? So that's going to be something important for us to understand and look into. But Apple, again, down a little bit over 2%. Keep a close eye at $120. That's going to be a really, really strong support, in my strong opinion, for Apple stock. That right there is going to be aligned with the lower lows. And $124 is also going to be like a resistance moving forward. So I will go ahead and turn that into a resistance for Apple for us to watch, right? So that right there is potentially going to be a resistance, and 120 is going to be the support. And again, we got to keep in mind, where's Apple coming from, their growth story, whether we're going to see a growing curve, a plateauing curve, or a declining curve. All that is going to really affect Apple's stock price in the future. And then we have the estimate 240 million iPhone 12s that can potentially be sold, outperforming their iPhone 15 and their iPhone 15, iPhone 6. Basically, they're outperforming their own guidance for that as well. So again, very, very excited about Apple's growth story. Potentially 120 is going to be the strong support, and 124 is going to be the next resistance. All right, so again, if you guys know what those timestamps are, I would really, really appreciate that. So for Tesla and Apple, let me know, so that everybody new joining, thank you so much for joining in. I'm actually going to grab some water, and while you guys wait, it's going to basically be 15 seconds. I will put an ad really over here, and I'll be right back. All right, so next up we're gonna go over NEO. So NEO is on a different chart. So we got the SPYs down a little bit over 0.5%, and we've got the Qs down a little bit over 1.5%. So again, we are having some type of recovery, but we are still pulling back substantially. Let's take a look at where Bitcoin is. So Bitcoin down a little bit over 10% now. We've got the VIX creeping up even more, up a little bit over 5.5%. So guys, this is really important because the volatility on the S&P 500, if this thing keeps creeping up, if you do see a push higher for the volatility on the S&P, 28, 30 levels, even as high as 38, is going to really crank the markets. It's going to really crank the markets. And that was our highs from last week of January, but the pullback was, quite severe. Where was the S&P back then? So let's take a look at this. You know what? We're going to put the S&P over here. We're going to put the VIX over here very quickly. So let's take a look at the 4-hour. This right here was last week. So, last week of January. So last week of January, you were down a little bit over 4%. And the volatility, let's take a look, spiked over here, right? We spiked all the way to highs of 38, 37. So this was coming in from 21, 27 levels. We jumped over 75%. The S&P 500 down a little bit over 4.5%, almost 5%. So the inverse relationship there. And right now we are seeing this creep up once again, up a little bit over 5.5%. So that's gonna potentially have some type of an effect on the S&P moving forward, right? So it's gonna be a bumpy ride, but we're gonna get through this. We're gonna get through this together, and this is very normal in the markets. Happens very often. We just saw this during last week of January, right? So it happens every now and then. So. All right, let's go over to NEO. So that's going to be chart number 2 here. Let's quickly check where we are. Again, thank you so much for joining in. If you guys don't mind smashing that like button, I would really appreciate that. We have a little bit over 800 people watching, or a little bit over 1,300 people watching. So again, thank you so much. And let's see if you have anything coming up on Bloomberg. Just reload that. But NEO down a little bit over 8%, so definitely very significant pullback for NEO as well. And the support to watch in the short term is going to stay put at close to $43 per share. I mean, as soon as the market opens, it's going to be very interesting to see what happens. Whether we see a significant sell-off and then a rally towards the end of the day, or if we're going to see some type of a push higher for the first 5 to 10 minutes, and then we're going to see a significant pull down. One fast duster. I couldn't agree with you more, because right now we'll be watching. So what he says is, I will be watching NASDAQ when it starts to recover, buying a lot of TQs for 3x gains to offset my losses. I always do this. Easy money, don't buy yet. I agree with you. I completely agree with you. And this is something that, this is I feel like this is a hidden gem. There's a lot of volatility and a lot of risk involved with doing this. So unless you have, the effort and the time and the money to kind of weather that, it's not for the faint of heart, because the leverage ETFs, they can really kind of draw down on you quite significantly. So what he's saying is, when the NASDAQ and when the underlying indices drop, the leverage ETNs drop even further, right? We've got TQQs, we've got LABU, that's going to be the biotech ETN. We've got a lot of different ETFs out there. FNGU was one of the ones that was up like 2,000% since March, because it's so concentrated on 7 to 8 stocks, right? So those are, and it's very tech heavy. It's a tech heavy. It's got FANG plus Tesla plus Microsoft in there, plus Twitter, Nvidia, some of those stocks. So when we see significant pullbacks for the broader markets or the underlying index, the leverage ETNs pull back substantially, but we also see a great amount of gains on the recovery back up to potentially where we were trading, or to new all-time highs. So that's another thing to look into moving forward as well. But $43, the next support, $50, I will go ahead and unfortunately turn that into a resistance. Something that we talked about in our yesterday's video was $50 to potentially act as a support. But now we are gapping down heavily. There's a lot of selling pressure coming in because of the yields, because of Bitcoin, because of the broader markets. So, this has nothing to do with the fundamentals or the change on the company, right? So again, we have to take that into account, why this is happening, what's the reason behind this sell-off, and what's going to come out of this weakness and the sell-off as well, right? So for NEO, $43 is going to be the support to watch, all the way as low as like 38. I personally do not see $38 unless we don't stabilize, unless we don't consolidate sideways. That's the most important thing for every single stock out there in the markets right now, is consolidation. It's consolidation, it's sideways trading, it's kind of absorbing that blow and exhausting all the selling pressure. I'm heavy on AMD, the worst feeling to be an AMD. And I agree, William, I'm pretty heavy on AMD as well. And this is, again, not a great feeling to have in the short term. But AMD, I have a high conviction. I'm going to dollar cost average on that position. It's a long-term play for me. So I'm planning on holding Advanced Micro Devices for at least the next 5 years because they have a lot of growth potential and a lot of untapped market share within the semiconductor industry. Like, think about this. Semiconductors and chips are used in almost every piece of equipment out there. And there's a global shortage. That's exactly why there's a global shortage, right? There's a substantial demand for that oversupply, and AMD is going to be one of the leaders offering that. And Lisa Su even mentioned that we're going to see substantial increase in that in the second half of 2021. So we know that like in the first half, in the second quarter, in the first quarter of 2021, there's obviously, there's going to be a lot of pain for holding AMD, but eventually I have a lot of conviction. Can I be wrong? Absolutely. I can be wrong on AMD over the long term, but I still have a lot of confidence in that company. They have a very low debt, strong cash position, a lot of growth ahead of the company, substantially growing gross margins. So again, a lot of potential for AMD in my strong opinion. I could be wrong, but I do see that stock price hitting at least 120, 130 in the future. And right now we are seeing some short-term pullbacks and corrections and fear in the markets, and that's what's driving prices lower. So that's something to consider. And of course, some of those valuation metrics we also have to keep in check because of the yields. The rising yields is a big part of it. And Federal Jerome Powell is also speaking today. So at 10 a.m. Eastern, he's going to be speaking. So keep a close eye on that as well. I don't know if we're going to be live streaming till then. It's 8 a.m., almost 8 a.m. So we'll see if we're going to be around by then. So we have a little bit over 1,500 people watching. Let's see if we can get to at least 1,000 likes. I would really, really appreciate my channel and really help push out this stream to other people. We've talked about a lot of different things with the low PCC. So that's actually a great question. Put call ratios is also something that we look at. But the VIX is really important. Sorry. But the volatility is something that we look at in the context of the S&P 500. Now, of course, when the put call ratio, it can be counterintuitive. It depends how you look at. If there's more put options open, that can also signal that people are putting a bearish bet on the market. But that can also mean that there's a lot of people bearish on the markets, hence the market doing the opposite of what the people are thinking, hence going up, right? And similar cases when there's a lot of call options open, that basically means that there are a lot of people out there putting a bullish bet on the market, hence also being counterintuitive that a lot of people are bullish on the markets, hence the market pulling back. So it really depends on how you look at, which is why I prefer to look at the volatility on the S&P, which is the VIX, because it moves in a very, very specific way and it has a degree of relationship to the S&P 500. So honestly, if we do see a spike for the VIX, again, that's going to be bottom right here up until 37, 38, then we can see a more severe pullback for the S&P, for the NASDAQ, for big tech as well. Alex, I did not have any puts. But I did reposition my portfolio a little bit, and I was basically going into a little bit heavier on some high conviction picks and basically consolidating a little bit on 3 to 4 stocks that I believe are going to be really, really strong long-term plays. Again, AMD is one of them, Tesla is one of them, Apple, Amazon are 2 of them that I have a lot of conviction in over the long term, which of course definitely hurts since the stocks are down quite substantially today. But again, I plan to dollar cost average for those positions and continue to hold over the long term for those as well. So where were we? So we were talking about NEO. So NEO, $43 is going to be the next support. So actually the 4-hour candle just opened at 8 a.m. So we've got the second 4-hour candle open. So that's going to be this right here. You guys will notice that we just opened 8 a.m. right here. $43.25 is going to be the support level to watch for NEO. $50 is going to be the resistance for us to watch. And again, if there's one thing that I can ask from you guys, if you guys know any of the timestamps for Tesla, Apple, NEO, please let me know so we have a lot of new people joining in, so we can just simply refer them to that timestamp. They can go watch those analyses and then jump over to the live stream as well. So yeah, that's going to be the support and the resistance level for us to watch. Let's take a look at what Bloomberg is reporting right now, or if there's anything interesting for us to look at. So we've got the ads going on. So Bitcoin is down a little bit over 10%. All right, let's go over to CCIV. So CCIV down a little bit over 35%. Definitely a very, very significant sell-off. I think it's over on this chart. Yeah, so very, very significant sell-off. Like prior to this breakout, when I was analyzing CCIV, I mentioned that it's basically trading in this uptrending channel, making higher highs, higher lows. We blew the top off, we broke out, and then there were three support levels rather that we were watching, right? So you'll notice, well, let's talk about fundamentals first. Let's talk about fundamentals and what exactly happened with CCIV, right? So if I go over to these articles, so you'll notice this right here is going to be 13 hours ago. So let's take a look at this one. So Lucid SPAC gives us some of the massive gain after merger confirmed. So reading further, you'll notice that shares of Blanchett company combining with electric vehicle startup Lucid Motors plunged in early trading after confirming the biggest SPAC merger yet to cash in on investor enthusiasm for battery-powered cars. So what exactly happened was, and this is my understanding of the whole situation, is earlier back in January and even earlier in February, they basically said that the deal is going to be valued up to $15 billion. And correct me if I'm wrong, but they said it was going to be valued somewhere between $12 and $15 billion. But yesterday when the merger news came out, they basically said that the pro forma equity value is going to be worth of $24 billion, right? That was the big caveat right there, and the big catch is that they basically put a 50% premium over the originally stated equity value or the market value, or the public value of the company Lucid Motors, right? So this right here with a $10 SPAC price basically puts the valuation at close to over, I think, 60 billion at $35 to $40 price. That's where it puts it at. So I think that right there was the big caveat with the Churchill Capital. And of course, you know, the valuation came in much higher. So right here it says the placement sold a $15 share at a 50% premium to Churchill's net asset value, which translates to into about $24 billion in pro forma equity values, right? So 50%, because earlier it was stated roughly at 12 to, all right here. So the company, the combined company has a transaction equity value of 11.8 billion, and earlier they said that the value, the pro forma value, is going to be, or the equity value is going to be somewhere between 12 and 15 billion. And that right there was a 50% premium over Mimi. Thank you so much. I'm like 999. So again, thank you so much for joining in and dropping that like button. I really do appreciate that. So that right there is going to be a big reason. And you know, honestly, and I missed out on this trade. Like, I completely agree, I missed out, and I didn't feel like I wanted to chase this, even though Lucid Motors, in my strong opinion, from as much as information I know about the company, has a lot of potential, right? It has a lot of potential. The reason why this was one of the biggest mergers in the first place is because Lucid Motors is a strong EV company, right? They're going to start deliveries in the summer, and this is strictly pure fundamental and valuation standpoint sell-off. That's it. There's no reason why Lucid Motors shouldn't have a lot of growth projections in the future. But from both a technical and fundamental standpoint, this actually did get away from me because I didn't feel comfortable personally buying something that was already up, even though I missed out on majority of the gains, trading all the way as high as $64 per share. But that's okay. I mean, I did miss out from a technical standpoint, but fundamentally speaking, that's one of the reasons why we are seeing such a significant pullback, is because the valuation came in at $35 to $40 per share for CCIV when they do merge with Lucid Motors. So, you know, that's the only reason. Now, if you were to look at the technical analysis now, that right there are going to be three support levels to watch. If I were to kind of extend this line, you'll notice that we are somewhat, you can make an argument that we are somewhat trading right there at that support, at that ascending low. And right here is going to be the blow of the top rally when we essentially broke out of this uptrending channel, trading all the way to highs of 64, 65. Let's go over to the 30-minute time frame. We sold off all the way down here, so we found support at $50, so consolidated here before pushing higher, finding a resistance as high as this level at $64, $65 per share before breaking down, selling off all the way down to this $35 level. So that right there would be somewhat of a support. Right now we are still hovering over 35. So that right there is going to be the 30-minute time frame. If you go over to the 5-minute chart, you'll notice that we are validating that $35 support. So right here, that's going to be the next support level to watch. And massive amount of volume coming in as well. You'll notice 1.5 million shares traded right at 8 a.m. And this right here, about 738,000. And yesterday, there was a lot of volume, right? This right here was as high as 1.5 million shares. This right here, 1.3 million, 1.8 million, 1.4 million. So a lot of volume for CCIV right now. If you go over to the 1 hour chart, you'll notice that we are, again, consolidating right at $35, right? Pre-market, we're slightly over 36 now. We're down just about 36%. That right there is going to be the support level to watch for CCIV, right? Right at that level. So it's going to be very interesting for us to see if we actually break down below this level or if we can see a retest of 42. That's going to be the resistance to watch. Right at that level for CCIV, and these $50 is also going to be the resistance as high as this level. And if we do see any type of a breakdown below 35, which considering the broader markets is somewhat reasonable, and we could see that happen, then $30 is going to be the next level right here. So right at this support. So that, again, previous acted as a support right here. So much consolidation before a huge breakout to the upside. So previous support. Ali Reza, thank you so much for joining in from Iran. Shout out to Iran. Thank you so much for everything. And again, shout out to all of you guys for joining in. I really do appreciate you guys. This is the first time we actually have so many people watching. So 1,600 is the first time we have so many people watching, and we have a little bit over 1,000 likes. So again, thank you so much for your guys' support. I really do appreciate you guys a lot. So $30 is going to be the potential support if you do break down below 35, but right now it looks like pre-market 35 is still getting held up, right? So that's going to be the support inside this uptrending channel, kind of aligned with this previous resistance, new support potentially. So we'll see if that level gets validated. And even from a fundamental standpoint, if you were to look at the valuation, it should be personally be somewhere between $35 to $40, right? So that's going to be the price within which it's supposed to be trading from a fundamental standpoint valuation. So anything below that, could represent Lucid Motors being undervalued in the short term, considering all the fear in the markets. Again, Lucid Motors, strong company, a lot of potential in the future. And this right here was a little bit of an overblown move and a reaction after hours as well, considering the deal for CCIV that came in at a much higher 50% premium. So, right, let's take a look at if anything's coming up on Bloomberg. Play again. I just played. So we'll see if there's anything, because it's going to be very interesting for us to find out how the yields are doing, how there's a lot of other stuff that's going to get priced into the markets very quickly. So again, Zane, thank you so much. I really do appreciate it. Thank you so much for your guys' support. I really appreciate that. Been getting some really nice comments. Again, shout out to all of you guys. All right, let's take a look at the markets really quickly, because we have to look at the markets. SPY down a little bit over 0.5%. We've got the Qs over here down a little bit over 1.7%. So again, we're extending on that sell-off from yesterday. So Mohit, I'll try to come live whenever the market's down, because I'm here to support you guys, and I'm down too. Like, I'm down pretty significantly. Yesterday I was down a little bit over $4,000. I mentioned it to the Patreon members. By the way, if you want to get access to the TradingView charts, join our Discord. The link is going to be down in the description for the Patreon. And I mentioned that, this is quite unfortunate. This is how real the market gets. This is part of investing. You're not always going to see green days. And one of the things that everyone needs to get comfortable with is being uncomfortable, right? That's the most unfortunate feeling, but that's the reality of the markets, right? We're not going to see greens and gains all day, every week, every month. There's going to be red days, there's going to be red weeks, there's going to be red months. And I can tell you, this is not the first, this is not the last time we're going to see this. This is going to happen again in the future. So if you're going to be investing, if you're going to be taking risks in the markets, this is something that everyone needs to just get used to it, right? It's part of the game. I know that 2020, there's been a lot of new people that have been joining, investing and trading as well. So it's very different. It's a psychological shift, seeing red days, seeing red weeks, seeing red months, because in 2020 we saw what happened to the markets, right? We've been on this extended rally, but this also happens, right? This happened in 2020 in March. This happened in 2007, 2008. This happened in 2018. That was also the time when I was investing. I've been investing for a little bit over 3 years, so I haven't really experienced what the Great Recession or the dot-com bubble looks like, but I've studied those times, and I was also part of during the China and the US and China trade wars, last quarter of 2018, going into 2019. So that was pretty severe pullbacks as well. So again, Bruce, thank you so much for that. Being comfortable with the uncertainty ahead of us in the markets is very, very important. And it's all about having conviction in the markets. I would encourage you guys to go to your portfolio and see which plays you have the most conviction in, right? Which companies you are more than willing to go down with. I'm more than willing to go down with Tesla. I'm more than willing to go down with Apple, Amazon, AMD. Those are my high conviction stocks that I'm more than willing to go down with. I don't care where they go. I will be holding on to them with my dear life, right? So that's just kind of a little bit of a rant that I wanted to put out there. But again, let's take a look at what's going on with this. I have no idea. All right, so NEO we covered. We're gonna go over. So NEO, Apple, if you guys have the timestamps, just let me know. It really helps out a lot. So one faster, I've been investing for 25 years. Don't panic, just a blip, and we will get through this. Thank you so much for that. And that's a lot of experience right there, folks, right? We've got how many people? Let's see. So we've got a little bit over 1,600 people watching, almost 1,700. And it's great to know that we have somebody that has 25 years worth of experience with us, right? There could be more people that have 30, 40 years worth of experience. And it's really interesting and important for us to understand, what that looks like, right? That 25 years, we're also talking the dot-com bubble. We're also talking the Great Recession during that time. So it's really important. It's really, it takes a lot of courage to stay invested in the markets and not trying to time it, but to stay invested dollar cost average in companies that you believe are going to grow in the future. In 10 years from now, which companies are going to be worth a lot more than they are today, right? Do you think the Dow Jones is going to be worth more or less than where it is today? Do you think the NASDAQ or the S&P is going to be worth more or less in 10 years from now? As the economy grows, as businesses grow, what do you think is going to happen, right? That's a simple question. That's a simple assessment that we can all make on the longer term view on the markets. And in the short term, it's unfortunate. It is. It's uncomfortable. It's unfortunate. It sucks. I totally get it. But we got to keep our eyes on the broader perspective and the long term picture here. So SPY down a little bit over 0.5%. The Q is down a little bit over 1.7. Let's take a look at where everything else is. Bitcoin down a little bit over 9%. The volatility is up over 5.5%. Amazon down almost 2%. Apple down over 2.5%. And this right here, we're going to put the 10-year yield. All right, so for the main watch list, we're going to put the US 10-year yield. So down about 62 basis points for the yields. So there you go. We have another person with 20 years of experience, right? Minor blip, and this is in the long-term perspective here. All right, so we're gonna cover another stock here. Let's go over to Amazon. Well, let's go over to AMD. We covered CCIV. Let's just go over to some ARK ETFs first, and then we'll circle back to AMD, Palantir, DraftKings, PayPal, Square, so on and so forth. So let's go over to ARKK. So definitely quite a severe pullback of over 4.5%. trading as low as $137 per share. And this is coming in from November, actually. So let me go over to the daily chart. So ARKK on an absolute rally, it has been since March, when it was trading roughly at $33 per share, up over 374%. And right now, we are literally trading below that 50 EMA, so below 138. So that's going to be a critical shift in the price. Well, the last time we saw a breakdown below 50 EMA was in November of 2020. That was the last time we got validated at that 50 EMA here, consolidated above that yellow line you guys see on the chart, pushed up, broke out, back tested that old resistance as a new support before breaking out even further to new all-time highs. So Ghana, I did have one, but having lived 5 years in the United States, I actually picked up the accent. And Michael, any thoughts on AMD? So we covered AMD earlier. We have talked about it. Haven't really gone over the technicals yet, so stick around for that. We will go over in just a second as well. All right, so 137, 138 is going to be the next support. We'll see where it's trading. So if I were to kind of map out like here, roughly, it's not an exact price right there, because if you were to kind of look at this, we did trade slightly above that 139, 140 level, or that's going to be 136. Yep, so 136 level. So you'll notice that we were kind of above that level, but if you want to scroll down, we back tested that old resistance as a new support. We somewhat were hovering over that 136 level, and right now we are trading exactly above that level as well. So 136 would be the support to watch for ARKK, although it does have a lot of influence on the underlying holdings for a lot of the ETFs. So it's very difficult for us to understand, what that support resistance looks like, because it's not like there's a lot of supply or demand for that ETF that drives the price, but instead it's the underlying holdings, right? If Tesla moves up, that's what's going to drive ARKK higher, right? It's somewhat of a derivative because it's deriving its value from the underlying holdings. So, me going over support resistance levels is somewhat invalid for ETFs and for indices in general, but again, those are psychological levels that people do watch, and it also helps with the underlying holdings as well. So again, 136 is going to be a good price to watch for ARKK, and we're down a little bit over 14.5, almost 15% from our all-time highs for ARKK. So ARKG, we're gonna go over. I think this is the one that I was personally invested in for a really long time until finally trimming some of my positions in this. We are trading below the $100 mark. $109, $110 was kind of like hovering over that level. Actually, let me push that up to 115. So double top resistance here. So right here, double top resistance before selling down, trading as low as $92, $93 per share. That's going to be the next support to watch. Pre-market, we did come down to pre-market we did come down to 192, almost $93 before kind of bouncing back up. So guys, I'm very, very interested to see where the markets trade today, because pre-market we're already gapping down so much. So I'm going to be very interested to find out, do we sell off further, or if you see any type of a recovery after the market opens, because the SPY and the Qs, they're both down. Qs quite significantly down, a little bit over 1.5, almost 2%, trading as low as $316. So quite a severe pullback. So let's see if we can get over to 1,200 likes. Again, thank you so much for joining in. I really, really do appreciate you guys' support as always. Let me know in the live stream if there's any other stocks to look at. I really don't know what's going on with Bloomberg right now. Let me see if I can fix this. Should be working. It was working earlier. Because we gotta keep an eye out on the news as well. Right? You gotta watch the news and see what's going on. Peyton, what's up? Good to have you on board. Thank you for joining. Something wrong with the audio either here. We'll see what happens after this ad.
different economic objective.
All right, Ether.
One that we are very focused on, the president's very focused on.
So I'll just repeat that again, Brian, just to be clear on it. I'm just trying to understand what the constraints are in your mind to further fiscal spending, whether it's political space, whether it's fiscal space, whether it's inflation. What do you think the constraints are over loosening the purse strings even more in the future?
Well, I think we have a fiscal framework, and the president has laid out where...
We'll circle back to this, guys. Rita's like, I've got to find my diamond hands. Well, diamond hands will come with confidence. Confidence will come with high conviction plays. If there's anything that you were really scared about in the markets right now, if there's anything that you feel like I've got a really big position size, or if I'm investing in something that I bought, based on some FOMO or euphoria, you don't really know the fundamentals, you don't understand the risks involved for that stock or for whatever you're invested in, maybe the confidence level would be down, hence resulting in not having so quote unquote diamond hands, is because conviction, confidence will lead to having diamond hands, right? So that's kind of like my 2 cents about that. So it's really an assessment that everybody needs to do, because the markets are in a very, very critical environment right now. So conviction and confidence is going to win out over the long term, and it's going to really be those companies that have absolutely zero to none bankruptcy risk, companies that can weather all these pullbacks, all these recessions in the future as well. So we'll see what happens. All right, so we're gonna go over to ARKQ. So this one, autonomous, is down a lot as well, because it also has Tesla, I think 9% weighting, a little bit over 9%. So you'll notice that from October, we are up a little bit over 78%. So again, we're pulling back down to the 200 simple moving average. So that's going to be this 200 SMA. Again, and that's aligned with this support roughly at $86, right? So if I were to kind of map this out here, you'll notice that is somewhat of a support that we kind of got validated at going back as far as the last week of January, before surging even higher, pushing higher to new all-time highs, $202 a share. That's going to be the resistance right there for ARKQ. So right there, 102 is going to be the resistance. Again, doing some technical analysis on ETFs does not make a lot of sense, because look how we covered Apple earlier. So you're more than welcome to watch that live stream and then jump over to the current live stream as well. But we covered Apple, we covered Tesla, we covered NEO, we've covered ARK Invest ETFs as well. So I'm just waiting for you guys to tell me the timestamp so I can add that to this list. So we got a little bit of these timestamps that I really need to add. All right, so right, so that right there is going to be the support at $87. Again, a lot of it depends on the underlying holdings for ARKQ, so Tesla is going to be a big one. I think Baidu is the second biggest holding for ARKQ in that ETF. Let's take a look. So let's go over to the ETF. So you scroll down to the fund holdings, and that's the ARKQ. That's the one that we're analyzing right now. So let's see. We've got Tesla, we've got Baidu, we've got Deere, Trimble, JD.com. Google is one of them. So 9%, 5.8% Baidu. So 9% is going to be Tesla, the biggest weighting, and that's probably one of the reasons why we're down a little bit over 4.5%, almost 5% for this as well. And it was on the official page for Palantir. You guys are more than welcome to watch. I encourage you guys to watch that as well. But he basically was going over, software and how data is going to play a significant role in the society in the future. So, but that being said, a lot of weakness with the lockup period expiration. We're down a little bit over 5.5%, almost 6%. Quick market update. 1.7% down for the NASDAQ or for the Qs. S&P down a little bit over 0.5%. The yields down slightly over 25 basis points. Bitcoin down a little bit over 10%. The volatility is spiking to over 5% right now. That's going to be the VIX. Apple down over 2% now, trading as low as 123. Amazon down about 2%. All right, perfect. So timestamp mode, what is that? 48. Just 48. Is there like a minute and second that you could give me? Thank you so much. So yeah, make sure that you drop that like button. Really do appreciate you guys. I'm going to do this for like another maybe 15-20 minutes. We're going to try to get through as many stocks as possible. But Palantir, keep a close eye at $25. I've already mentioned this before. So 25 is going to be a really, really strong support level to watch. $22, $22.50, $23 is going to be the next support level to watch right now. But I want to really go over some other stocks just to give you guys an update on the pre-markets. So let's go over to some growth here. Mara, down over 13.5, almost 14%. Quite a significant pullback. Riot, let's take a look at that one. Down over 11.5, almost 12%. We got Fiverr down almost 8%, trading as low as 256. Fiverr, such a volatile move coming in from 335 just February 16th, like last week, and a 24% drop. Absolutely crazy pullback. But a lot of growth potential though. Freelance and gig economy is going to grow substantially over the years. Fiverr is one of the plays that I had for a swing trade. But Upwork is also reporting, guys. So this right here is going to be the earnings breakdown for everybody new joining in. I'm going to go over this really quickly once again. So Tuesday is going to be today. So we've got Square reporting. Upwork is reporting today after the market's closed. Direct competitor with Fiverr. We've got Macy's, Home Depot, Hyliion. I know that a lot of people are going to be interested in that one. Then tomorrow, Wednesday, we've got Jumia, Nvidia, Teladoc, Redfin. We've got Teladoc. I already mentioned. Lowe's is also reporting. TJX is reporting, which is going to be somewhat of a recovery play there. Thursday is going to be very, very interesting. We've got Moderna, Salesforce, Plug Power, Rocket Companies, Etsy, Best Buy, Beyond Meat, Virgin Galactic, Wayfair, Li Auto, Nikola. All those companies reporting as well. And then on Friday, we've got DraftKings, AMC Networks also reporting as well. So we've got a lot of earnings coming up, a lot of interesting companies that are going to be reporting, but Plug Power is down a little bit over 7%. CCIV we already covered, John, so you're more than welcome to go back and watch that and then jump over to the live stream. All right, Wayfair is down, is down a little bit over 2%. Nano Dimensions is down a little bit over 11.5, almost 12%. We've got Bionano Genomics down a little bit over 11%. GHVI, this is another stock that I'm potentially researching. So this is a SPAC with Matterport. Matterport is like a 3D camera that allows you to actually, let me go over really quickly because this was like really interesting stuff, right? This is something that when I was looking at the company, I was really thrilled by it. So Matterport, and go over to the website. So Matterport is a company that basically designs like these cameras and these apps that allow you to capture any space and put it in like a 3D space. So with work from home trends, it's really, there's a lot of application for like real estate, construction, engineering, having being worked in the construction industry for the last 2 years. I know how important it is to basically do all of these things from the leisure of being at your office or your home and having those measurements and having like a full 3D analysis of that as well. So let's go over to see if there's any captures because I know that I saw some. Let's see if we can find it. All right, here. So let's do. I forgot where I saw that. Yep, so let's just take a look if you can see this. So yeah, I mean, it's going to be pretty much like this that allows you to kind of walk through any properties, which is quite interesting in my opinion. I mean, if you have access to these, and I think Redfin uses this on all of their, not all of their, but some of their properties that are listed on Redfin, basically uses this technology to have access to basically have for all the buyers and sellers to have virtual access to all the properties. And I can see this having such a significant impact, or like such a significant application in the construction engineering space. So and this right here is going to be a ruler where you can basically use that to kind of map or like measure things, right? So you can basically bring that down. You know, if you want to measure the door, that right there is going to be complete, you know, whatever, 6 feet 2 inches, 2 feet 10 inches, kind of like that. So I think it's pretty cool technology. So that's something that I'm going to be analyzing moving forward. It's down a little bit over 9%. So definitely maybe worth looking into sooner rather than later, because this could represent a really good buying opportunity for this company as well. All right, so APPS, let's take a look. So down 8%, trading as low as $78. Well, $74.51, down over 4.5%. Etsy down almost 4%, trading as low as this 200 simple moving average. Sam's Beer, Boston Beer, is pretty much flat actually. So this is a company that would potentially, you know, did really well during the pandemic, during the work from home trends, because the demand for, you know, alcohol beverages basically skyrocketed, and so did this company, right? Basically going from like, I think $300 a share back in March to now well over, you know, $1,000, and it was trading even as high as $1,200 per share. So definitely a lot of growth potential already priced in for this company, and a lot of revenues already priced in because of the pandemic. So AI down a little bit over 4%, almost 4%. Roku down a little bit over 3%. We've got Grow Generation down. CrowdStrike down over 4%. So the whole market is just taking a beating. Ping Identity is a stock that we covered on the channel previously. Okta Identity is also like a cybersecurity. It's actually pushing up 274. It was trading as low as 256. So I wonder what happened there. Claudia, we covered Palantir earlier. We covered Tesla. So you guys are more than welcome to kind of go back and watch those as well, and then kind of jump over to the live stream. So, all right, we'll keep a close eye on Okta as well. But Trade Desk, let's take a look, down 3%. Dropbox down 2.5%. Domino's down about 0.5%. So this could be, well, this was another work from home sort of trend, because we did see the sales kind of skyrocket. Vroom up, down about 5.5%. Redfin down about 2%. We've got DermTech down about 7.5%, almost 8%. Let's take a look at Corsair. Corsair Gaming down about 6%, over 6%. Thomas, I guess all we need is some beer tonight. Yeah, we could really forget stuff right now. I wouldn't mind. Celsius down 2.5%. Lovesac pretty much flat. Baidu is down about over 5% as well. So, all right, let's take a look. Palantir we already covered. We're gonna go quickly over to. Let's take a look at where Lee and Xpeng are trading. So Lee definitely breaking down to this support at 26.50. So that's going to be the level to watch moving forward for Lee Auto. You know, that's a level from going back as far as like December 28. So we kind of sold off all the way down to this support before pushing up close to 40%. And that right there again, $26 is going to be the level to watch. Jays, you keep saying pullbacks is a straight up crash. I would disagree to some extent, because you know, pullback is, in my opinion, a pullback is 5 to 6%, and that's what we're seeing for the NASDAQ. I mean, if you go over to the QQQs, from our all-time highs, you know, we are down, let's say 338, we are down a little bit over 6%. So that right there is somewhat of a pullback territory. This is what we saw like during the last week of January as well. We were down, you know, almost 6% before pushing higher, right? So this is a pullback territory, and if I go over to SPX, you'll notice that this was kind of like the analysis of a pullback territory. This right here would be more of a correction territory, and that right there would be more of a bear market territory, which would represent different levels of drops. So 8%, close to 9% is going to be more of a correction. 4 to 5% is reasonable. It's a pullback, right? It's not as severe. It only becomes severe because when everybody sees, all these markets pulling back, all the individual stocks pulling back, there's a lot of panic in the markets, right? It's no surprise, and that's something that we need to subside, right? That's something that we need to kind of calm ourselves, not panic sell, not kind of react to that, because this is also coming in from some external factors as well, right? So let's see if you have anything going on here. All right, back to Li Auto. We're going to quickly go over Li Auto as well. And then XPeng as well, because they have earnings coming up very soon. So 26.50 or 26.67 are going to be some levels to watch right now. It's going to be very interesting for us to see if we actually, push higher, gap up above that level, or if we break down and open below that level. So they also have earnings coming up later this week. So I think it's February 25th. So Li Auto is reporting right here. So Li Auto is Thursday before the open. So keep a close eye as well on those earnings, revenue, EPS estimates. We broke it down in my previous videos. But $29.50 or $30 is going to be the next resistance for us to watch for Li Auto stock. So that right there is potentially going to be the next resistance to watch. And $26.50 is going to be the support. So next up, we've got XPeng, ticker symbol XPEV. XPeng breaking down that support at $37. So pre-market, we're down a little bit over 3.5%, trading as low as $36.52. So that right there would potentially be the resistance for us moving forward. And this right here is going to be the support, the next support for XPeng at close to $30 per share. So 37.40, 37.53 is going to be the next resistance, and this right here is going to be the next support for XPeng at close to $30 per share, considering the previous support level right here. So again, very, very interesting to find out how the markets trade intraday, because we're already gapping it down. So, usually when markets gap down, there's the selling pressure intraday, or the weakness comes in how the markets trade intraday, right? Whether we sell off further or if we have any type of a recovery, essentially getting the markets bought up, so we have some buying pressure take place intraday. But if we do continue to sell off, there's potentially even going to some getting halts, getting triggered on the broader markets, because I think over 5%, I believe, is when the markets have the first trading halt. Right now we are down roughly 1.5%, almost 2% for the Qs. And the SPY are down about 0.5%. Bitcoin down a little bit over 10%. The VIX spiking close to over 5%. We've got Amazon down 1.75%. We've got the yields down about 25 basis points as well. Now just about 12 basis points to be trading as high as 1.365. All right, let's take a look at how many people we have. 1,400, 1,437. So again, make sure that you drop a like. I'm going to probably do this for another 5 to 10 minutes, go over some stocks. So I hope you guys enjoy this. And again, make sure that you subscribe if you're new to the channel. Check out the Patreon link down in the description below. For the investor tier, so for the middle and the last tier, we're going to close that down very soon, because it gets a little overwhelming, because I do offer individual stock technical analyses on specific stocks. So every month, every first of the month, I will put out a post basically for people to comment their own tickers that they want me to look into from a technical standpoint, and then I'll send out a written analysis going over the weekly chart, the daily chart, the 4-hour chart, some support resistance levels to watch, and doing a complete technical analysis. So I will close that out very soon, because I don't want 70 or 80 people, because that really takes a lot of the time to basically send out those analyses, right? So XPeng down a little bit over 4%. Again, 37.50 is going to be the resistance. $30.90 is going to be the support to watch for Li Auto and XPeng. Let's go over to the DraftKings really quickly. I think DraftKings did get rejected from that resistance as high as $64, $65 per share. So that right there was a level coming in from, let's see, October of 2020. So let's see how much DraftKings is down. A little bit over 3.5%. And this is not any individual stock specific. You know, again, I gotta reiterate and let you guys know that this is not that one stock is going down or the other stock is going down. This is more of equities in general and a flight away from equities over to some other asset classes. This is quite normal because once the yields start going up, that's why we're seeing you know, such a rotation out of equities in general. Now tech is getting more severely hit because there's a more significant rotation out of tech into some other asset classes as opposed to other sectors and industries over some asset classes. I feel like support turning into resistance is the name of the game now. It is. I mean, you know, unfortunately it is, because the last few months we've seen so much resistance levels turn into support levels because we've seen so many breakouts, and now we're seeing a little bit of a shift where all these support levels are turning into resistance levels because we're breaking down, right? We're breaking down below those levels. So that right there is going to be the next resistance to watch at close to $66.50 for DraftKings. You know, with the legalization of a lot of different states is obviously going to help DraftKings in the future, but $55 is going to be the support. That's going to be this green rectangle you guys see right here. So right here, so it's going to be this green rectangle. Previous resistance, validated, somewhat of a validated support. So you'll notice that on the 30-minute time frame, we actually came all the way down to $55 per share before pushing higher once again. So that right there would be two levels to watch for DraftKings. Resistance at $65 per share, and support at $55 per share, close to $54.50 or $55 per share for DraftKings. And right now we are down a little bit over 3.5%, almost 4%. So let's go over to Amazon. Our Amazon, one of the biggest companies in the world, one of the biggest companies in the S&P 500, market cap at well over 1.6 trillion. You know, perfect validation of that pre-market support at close to 3,085, 3,090 levels. So 30-minute time frame, we gapped down, we sold off all the way down to that level, and we are seeing some upwards pressure and some recovery. Now the volume's really low. The volume's always been low for this stock because the price is trading at such a high price. So that being said, you know, this is a support that's been validated for Amazon for a really long time. So we'll see if that continues to get validated or if we do break down below that level. But 3250, there's so much resistance here. So we've got all the moving averages, and a 3250 resistance here is going to be the level to watch. Previous support here, previous resistance at 3250 here, previous resistance at 3250 here. So a lot of consolidation and a lot of resistance at that $3,250 per share for Amazon, and then of course 3,088 and 3,090 is going to be a really strong support. Again, we're going to have to find out if that level gets validated today or if we do see a breakdown below that support. So let's see if you have anything interesting to listen to on Bloomberg. Alright, so they're still coming in from the ads. We'll kind of tune back in. Alright, so we're going to do like a fire round. So if you have any stocks you want me to look into in the live chat, let me know. And I'll quickly go over that. I'll quickly go over support resistance levels for them, right? We're not going to go into too much detail. I'll go over what we can potentially see in terms of support and resistance levels for that stocks, right? So CCIV, JB, we already went over. We're going to go over QuantumScape really quickly. So QuantumScape, keep a close eye at $56. That's going to be the support level right here. And well, there's actually going to be two support levels to watch, right? There's going to be $56, and there's also going to be support right here where we are trading above $60 per share. And you'll notice that it's down about 6%. So $60 is going to be the support, and the resistance is going to stay put at close to $72, $73 per share. All right, so let's take a look. Shopify. We're going to turn this 1291 into a resistance. Well, actually, that's already a resistance. So that 1290, right now we're trading as low as 1269, down about 8%. 1238 is going to be the support, in my opinion, and 1292, almost 1300, is going to be a resistance. MRK, let's look at Merck. Merck I haven't analyzed yet, so really quickly going over this. Support is actually hovering right around that support level at close to $70. So that right there is going to be the support for Merck. And in terms of a resistance, right now it's really important to watch close to about $76 because pre-market hours we're getting rejected exactly at that level, so it needs to break out of that resistance. Right now we're down just about 11 basis points, so not that bad for Merck. Let's take a look at AI. So down about 4%, again, very, very strong sell-off coming in because of the broader market weakness. And this right here is going to be the next support level at close to $112. So right at that level. And the resistance it needs to break out of will potentially be as high as 132. So right at that level. Because previous support, previous resistance here, and then we sold off down to $132. All right, let's take a look at Apple. We already covered, so feel free to go back and watch that. Tesla support right now is sitting at 650, and resistance is sitting as high as 695. Palantir supports at 25, resistance at $29.30 per share. NEO supports at 38. Let me go over to NEO really quickly, just so. So NEO supports at close to 38. Or the near-term support is at 43. I mentioned 43. The support, near-term support at 43, and the next resistance is going to be sitting roughly at $49 to $50 per share. So $50 resistance with a $43 support for NEO right now. We'll see if that gets validated. Let's see if we can go over Jumia. So pretty significant sell-off as well, a little bit over 8% for Jumia. The resistance is going to be sitting right here at close to $50 per share. So that right there is going to be the resistance. And the support, it needs to kind of validate and stabilize that, is going to be sitting roughly at $41 to $42 per share. So it's going to be this level right here. So, I mean, this also is a previous resistance, so we'll see if that level gets validated. Maybe previous resistance potentially acting as some type of a support at 47. So again, it's going to be, for a lot of stocks, it's going to be interesting for us to see where the market opens and do we see a sell-off intraday or if we see any type of a recovery. That's going to be the story intraday, recovery or further sell-off. Let me know in the live chat, what do you guys think? Are we going to see a further sell-off intraday, or if we're going to see a recovery for a lot of stocks, essentially softening the blow, so to speak, because we're already gapping down so much. Unity Software, the next support, we're breaking down below that lower lows. So we're breaking down substantially below this level, right? So the next support is going to be sitting right here at close to 110, 109, previous resistance, new support here. And the next resistance is going to be sitting at 122. So that right there is going to be the level at close to 109, $110 for Unity. That's going to be a support, and 122 is going to be the next resistance to watch. Sell off, sell off, sell off, recovery, sell off, recovery. There's more sell off than there's recovery. All right, let's take a look at some more. Plug. Plug actually, unfortunately, the support is going to be at 38. The next support for Plug Power, 37 or $38 per share. So right around that level. Previous resistance that we kind of broke out of, and right now we are gapping down heavily, right? So Plug Power is one of the stocks that is down substantially, a little bit over 7.5%, almost 8%. So previous support now potentially acting as a new resistance. So that right there is going to be a potential resistance at close to $47 to $48 per share. So 37 support, 47 resistance for Plug Power, in my opinion, moving forward. Apple we already covered, so again, please make sure that you are checking out the video, the live stream. So let's see, we have a little bit over 1,300 people watching the live stream. You know, a little bit over 2 hours ago. So we have covered a lot of different stocks. So you're more than welcome to watch those videos as well, and kind of go back and check out those tickers, and then jump over to the live stream. All right, so let's see if you can listen to anything interesting right now.
Sales have been through the roof for the past 7 years. You could, or even longer, you could say people are willing to vote with their dollars for their conscience and give up potentially some upside. Hold aside that, you know, oil and coal have been a disaster for the past 5 years for investors. But the big change came after the January 6th insurrection. And when you see not just the Business Roundtable, but the National Chamber of Congress saying, even though we supported President Trump and many of his policies, we believe in the peaceful transition of power is the most important aspect. The rule of law matters to business, and therefore...
That's actually good. Thank you for reminding me. AMD, we actually did not go over. Thank you. So Advanced Micro Devices, down about 2.5%, almost 2.5%. So many resistance levels, right? It needs to change the trend. And this right here was the prediction from last week. Even though I was long on AMD, I mentioned that I would not be surprised if we do see a further sell-off down to $81, right? That is potentially going to be the next support that we're going to be watching for AMD stock. We kind of got tapped at this $95 resistance going back as far as last week. On February 16th, we had an inverted hammer. Since then, the stock is down a little bit over 12%. From our all-time highs, we are down even more, a little bit over 16%. So, you know, very substantial drop. We are still trading in this downtrending channel. AMD is making lower highs and lower lows. $88 is going to be the next resistance it needs to break out of. You'll notice that all the moving averages, the 21 EMA, the 50 EMA, sitting roughly at $88 or $89 per share. So very, very, very important for AMD to consolidate at $81, right? That's also the pre-market low. You'll notice pre-market, we kind of bounced off of that support right here, coming all the way down to $81 before pushing higher, having some type of a recovery. So intraday, it's going to be very, very interesting. You know, the markets will open in about 30 minutes. It's going to be very, very interesting for us to see if we see any type of recovery, or if we do see a further sell-off for a lot of these tech stocks. So $88 next resistance, $81 next support, $92 is going to be the next resistance as well for Advanced Micro Devices as well, moving forward. Let's go over to Square. Square also taking a breather, down about 5.5%. 244 next support. 263, 264 is going to be the next resistance to watch for Square moving forward. So again, quite a substantial decline. So this right here was a double top resistance at $280. We kind of got rejected a couple times before selling off, and $244 again is going to be the next support level to watch. Pre-market, similar to AMD, we came all the way down to 244 before pushing higher, right? Before validating that support and pushing higher. So 263 the next resistance. 244 is going to be the next support. PayPal, let's take a look. So PayPal has a support roughly at around 256. 266 is going to be, or 256 is going to be the next support. Previous resistance, and similar to AMD, similar to Square, we came almost as low as 256 before having some type of a recovery, and we're down a little bit over 4% pre-market as well. So keep a close eye at 256 resistance, 256 support, and $280 resistance. So let's go over to the 4-hour chart. And that right there is going to be the support, 256, $280 resistance for PayPal right now. SOXL, John, isn't that like a semiconductors, like a three leveraged ETF? I think it has like Nvidia, AMD, like in the underlying benchmark it does. Alright, so make sure that you drop a like. Let's see if we can get over to 1,400 likes on the live stream. Again, thank you so much for your guys' support. Quick run check on the markets. See, the yields are pushing higher again. We're up a little bit over 0.5%. Amazon down 1.75. The VIX up a little bit over 5.5%. Bitcoin down almost 10%, trading as low as 48,000. Let's see where the SPY is now down over 0.5%, and QQQ is down over 1.5%, almost 1.6%, 1.5%. So pretty significant pullback on the day for a lot of these stocks. So let's take a look at CCIV. Oh, look at that, CCIV having some type of a recovery. So $35 again, getting validated at that support, and we are seeing some minor push higher, as high as $38.79, $39 per share. QuantumScape down 6%. Visa down 11 basis points. Switchback 34.50 is going to be the support. We're literally right at that level. So right at the 34.50 support. Alright guys, I'm actually going to run. I've been live since like a little bit over 2 hours now. So maybe I'll do another live stream later today. But good luck out there, and stay safe. There's no need to panic sell. This is very normal in the market, and this happens very frequently. Maybe have a lot of stocks that are in high conviction plays, companies that you believe over the next 5 to 10 years that are going to do really well. And in my strong opinion, this is a small blip in the long-term view, in the broader perspective of the markets. So make sure that you have some cash handy and you are taking advantage of some opportunities that are going to present in the markets today. There's going to be a pretty red day. There's going to be a lot of great deals out there, and these are days that in hindsight we look forward to, but in the moment we get really uncomfortable when those happen, because nobody likes to look at being down thousands of dollars, right? So I hope that you guys take that as a really good opportunity to get in on some plays that you really wanted to get in on, find some growth companies, find some stocks that you've always wanted to buy at certain levels, at certain good deals. So again, take advantage of those. Good luck out there. I hope you guys have a great day. Thank you so much for tuning in, and make sure that you drop a like, subscribe if you're new to the channel. I really do appreciate you guys. I really do. So I'm very grateful for the community that we're building. The Patreon link is going to be down in the description below. So thank you so much for joining in. And again, I hope you guys enjoyed this video. The timestamps, I will try to put those for individual stocks after the live stream. So again, thank you, good luck, and have a great day. And I'll see you guys in the next video.